Hi everyone, welcome to a brand new episode of the Outlier Podcast. I've got a very special guest who has taken up a very big role in rate. Just this week, I've got Adam Boyd with me. Hi Adam, welcome to the show and how are you doing?
Hey, thanks for having me.
Absolute pleasure. So Adam is a celebrity after which people run, right? For the lack of better words. He has a very illustrious career. I mean, me and Adam, we gelled very well because he has also done analytics for living for some bunch of years across other banks, TD and BofA. Now, Adam has taken up an interesting role, an interesting turn in his career, moving out from traditional banks, moving to rate. So, Adam, how has been this journey so far? And first question, why the change?
Yeah, it's a great question. Yeah, so I think since this is called the Outlier Podcast, maybe I'll just talk a little bit about kind of how I got to where I am now and the career journey, and then I can talk for a minute or two about why rate was the right fit. And so you mentioned some of this in the tee up. Been in financial services for 25 plus years, the entirety of that time in banking, in a lot of different flavors of banking, a lot of different business areas. Started my career out of college, accident in the banking industry, on the phones as a contact center agent, selling deposit products at MBNA, which was a big credit card issuer in the late 90s. Growing up, I had a strong interest in science and thought I was going to go to medical school, and I was a biology major. Got to the time to really make a career choice and wasn't sure what I wanted to do, and kind of landed there. When I got to MBNA and started learning the business of banking, I found good alignment between some of the skills I already had, the interest I had, what really could make the banking business successful. But I came up through the ranks, from the very bottom of the totem pole all the way up, and kind of like through operations and worked for a number of years in pricing and analytics roles and product strategy across just about every banking product. And then about 6 years ago, 6 or 7 years ago, Citizens had the opportunity to take the lead of the business. That was early 2020. It was a really strong regional bank lender. We call it $5 billion a year originations, but it was a business that wasn't growing, and we saw this massive opportunity to really reinvent the customer experience and so really drive sort of my background in data and analytics, and even my background as a contact center agent, just understanding the guts of the operation, we transformed that business and turned it into the originator in the country. And that kind of segued into the opportunity to lead a number of other businesses at Citizens, including our business, which we just relaunched last year. And so, the success we had at Citizens, I think my phone was ringing quite a lot. And, I got a call from Rate, and it was, really unlike any other opportunity that had been presented to me before, because, here's a company that's been, really built from scratch over the last 26 years and has grown to be, the best mortgage lender in the country for anything the customer experience and some of the metrics that really matter to me. But the calls I got, the conversations I had weren't really about the financials, and they weren't about the metrics that you traditionally look at when you look at a financial services company. The conversations were all about culture and passion, what we were going to deliver for customers. And those are the things in my mind that really drive the financial outcomes. And so there was this really strong alignment between the way the Rate team and Victor Chiardelli specifically founded the company thinks about the importance of culture and customer experience and driving business outcomes, and the way I think about the business. So it just felt like a very natural fit. And so that was the primary motivator for me. And so, I loved working at Citizens, great company, really great people. I have a lot of friends there, really hard decision to make. But at the same time, I think the future is very, very bright.
Absolutely. I mean, obviously, you talked about, you hinted a bit on why rate, because you thought, one, the opportunity was great, and second, you really felt that the cultural fitment was there, right? Because that's very important at all of our careers, right? Now you joined Rate as a president of consumer lending after 25 years in FS. What specifically convinced you, if I were to ask you, that Rate was actually the right choice for you?
Yeah, I mean, honestly, the passion and the energy, the culture. I had a couple of conversations, and then, I read this interview that Victor had done. It's probably 7 years ago. We talked about kind kind of how he started, some of his early days in the business, and he's built the business over time, the principles, and looking at the core values of the company, and the core values of the company is really what the selling point was. We didn't really have a single P&L conversation during the entire recruiting process. So the business is really centered on passion for the customer and an ambition to be the best. And again, that to me is what will ultimately drive the outcomes. And so it's really that alignment of the vision and what we can deliver for customers, and the ambition to take some of those principles that have made Reed, a best-in-class mortgage lender, and extend that to this really what will be a broader financial and personal wellness platform, with this mortgage business really as the jewel of financial wellness. I think that is a really unique opportunity, and I'm really grateful to be part of it.
Sure. I mean, that speaks volume about the culture, right? I mean, talking about P&L is transactional. Again, so if you're having discussions across vision, that's what you would want to. I mean, now I understand why did you want to join it, and for others who are looking for interesting career and opportunities, I think, rate would be a good place to consider. And obviously, Adam is new there. I'm sure Adam would be hiring. Adam, if you're hiring, let the world know, right? People would be happy to apply and start working for you.
It's certainly going to be a growth story. So opportunities will abound.
Now, I mean, if you ask me, Anurag, what is rate? I know rate as a mortgage lender, right? As one of the as a top mortgage lender in the country. Rate pivoting into a broader consumer financial and wellness platform from the inside. How much of that pivot is offense chasing a bigger TAM versus defense against a tough mortgage cycle?
Yeah, it's a loaded question, but I would say the answer is neither. And in fact, that is the primary reason I'm here, because I really believe Victor to the core is passionate about what we're trying to do here. And certainly we will grow the P&L in the process, and there's a financial opportunity here for sure. But I don't think the primary motivation is, hey, we see this financial opportunity that we can pursue. I think he's really passionate about what we're trying to do and really create a brand and experience for the benefit of members, and it extends beyond just the mortgage business. And so if I were to think about just any company trying to build a financial wellness platform, it's really hard to build a financial wellness platform if you don't have strength in the mortgage business, because home buying and home ownership is such an important part of anyone's financial life. And so the fact that we already have the best mortgage business in the industry, and now we're going to really leverage the culture and drive an ambition that have created that business to build something much broader for the benefit of customers. And that extends beyond just financial wellness. It extends into personal and mental wellness as well. And so, that to me is a very unique and compelling value proposition. And I think the fact that we've got the strength in the mortgage business that we have today is actually a huge asset and an enabler for the broader value proposition that we're in the process of developing.
I see. Yeah, I mean, what we talked about, I personally feel that PFM is becoming a commodity, right? Because PFM was new 10 years back, but now almost every alternate firm is thinking about doing PFM. Not only firm, but every alternate bank is thinking about launching their own PFM. And it's a crowded market. It won't be easy, but obviously with expertise of rate in mortgage and having you on board, I think, I mean, I'm excited to see the journey that you guys are in, and I'll be plugged in. Wishing you all the best.
Yeah, thank you. Yeah, and I wouldn't think about it as traditional PFM. Like, I think when I think about PFM as sort of like budgeting tools and tracking your spending, that sort of thing, I think that's a very small component of it, honestly. And I don't think there's this massive scalable opportunity in PFM as a sort of transactional, like checking and deposit centric version of managing your finances. I don't think most people have interest in that. I think most of those platforms haven't been all that successful, but I think when you start to integrate credit solutions and you start to integrate other financial and personal wellness benefits, and you start to build a full membership and loyalty experience around that, I think that you have something that appeals to a broader audience. You have something that is distinctive and something that internally the part is referred to as a love brand, affectionately. couple of times, and I'm not into that. And like, it's really hard to take a company that is highly regarded in the mortgage space and has built this really impressive mortgage business and NPS, 80s, 90s, of hearing numbers like that. I mean, that's almost unheard of in a financial transaction as complex as a mortgage. And but he is pulling that off at scale. And so all of the ingredients are there to do this well and make this a success. And, like I said, I'm grateful to be here and be part of the story.
Absolutely. The next question that I'll ask you is very cliched because both of us have seen this. I mean, I talk about the journey of BI to AI, right? And half people don't understand that. So we've seen how BI transformed itself from BI to analytics to data science to finally quote unquote AI now with LLMs. I mean, LLMs are not new, right? LLMs were there even 20 years back, but we did not do much about them. So my question is, how do you think, not classic, maybe classical AI or generative AI, both of them, right? How do you think they will have an impact on consumer lending in the next few years?
Yeah, I mean, that's a good question. I think AI has been the hottest topic of conversation at every industry in the last 3 or 4 years, especially. Every time I get a vendor call or anyone showing AI or just attaching AI to whatever product or service they're selling, I instantly tell them, AI denier, you need to convince me that what you're bringing to the table is better. Look, I am certainly seeing use cases where AI can have a tremendous amount of value for certain office functions, specifically that are very bright for. You look at like the process to originate a loan and all the steps. A lot of that can be done at scale with much higher quality, much less friction, and so you can build a experience with AI-driven automation and more intelligent workflows. A lot of things that I've wanted and tried to do over the years that have been difficult with legacy technology will become possible with AI and agentic AI. And so that is, something that I'm very much looking forward to. And I think it will be for the benefit of the customer. I think the one place where I still remain a little bit skeptical is with customer facing applications of AI. And it will ultimately get to a place where I think the quality is good enough for really putting it in front of the customer. I'm not in the camp that it will ultimately replace human interaction altogether. It's because I think just by nature humans are social animals and are going to want to interact with other humans and not with robots, especially when it's something of importance. But I think on the front lines can be a nice complement to what a frontline staff person or salesperson or is managing interaction is trying to deliver. So I think there's opportunity there as well. But I think just pacing it appropriately, ensuring the quality is up to the standards. The last point I would make is, AI is not a cost takeout opportunity. It might ultimately deliver cost savings, but anyone who is approaching AI as a means to take cost out, is probably not going about it the right way in my mind.
Yeah, obviously. I mean, I agree to all your points, and believe me, I mean, this personal bias that I don't like talking or hearing about AI from someone who has not done analytics. Because, I mean, that's the basic, right? I mean, unless you do analytics, you won't be able to run or scale AI programs. Because, I mean, and it's very sad, by the way. I mean, when I talk to people, I mean, again, I'm not being biased, but if you do not know regression, you do not essentially understand what LLMs are, what transformers are, right? So that becomes a huge disconnect of actual practitioners and people who just landed up in a role to do AI now. So
Look,
that's
I think if you don't have a deep understanding of analytics, you can't lead your business, in this era or go forward. But I went back to grad school a few years ago and got a master's in applied statistics, not because I wanted to be a statistician and not because I wanted to spend my Sunday afternoon doing 3-page integrals so I could relearn calculus at 40 years old. I did it because it is increasingly becoming table stakes. And, if you really want the best customer experience and you really want to leverage the best capabilities available, you've got to understand it. And for every high value use case that exists, there are sort of like 10 snake oil salesmen out there just slapping an AI like extension on, whatever it is they're selling. And again, like you got to be able to really understand those opportunities that are real and deliver value and separate it from those that aren't. Understand the limitations of what it can't do, and proceed with an appropriate level of caution. So that's the way I think about it, and that's generally the way I think about everything. And so, I think tons of upside. The opportunity is massive, but we need to be really, really thoughtful about how it's implemented. And then, the last point I would make on that is just like the fuel for AI is data. And if you don't have the data, the AI is pretty much useless. Like if I've got, 3 dimensions, I don't really need AI. If I've got a million dimensions, then yeah, I need AI. And so it's important to think about it in that context as well. Because there are plenty of places where, I think traditional statistical modeling is going to be just as effective. And there are places where without AI, the art of the possible is not possible.
That's a very well summed up answer. At the end, you summed up with essentially cardinalities and dimensions. I mean, very well thought out that with X, Y, and Z, I do not really need AI. But with multi attributes, yes, maybe yes. I mean, I would need AI now. That's a very good way of looking into it. Moving on to the other side about so I mean, I sound like a broken record, but I talk about this example every single time about HELOC. I don't own a house, right? But I get HELOC offers every week and I hit it, right? But still, HELOC is having a moment right now. It's so hot. Any friend that I'm talking to runs PNL in any shape or form in any bank, in a financial institution. HELOC is the poster child. Do you think it's a trend or a long-term shift?
I have no doubt that it's a long-term shift. In fact, my crystal ball doesn't always work. If you were to rewind 4 or 5 years ago, this editorial for the talking about this exact topic, because if I were to look at why home equity was dying on the vine for the last decade prior to say 2020, 2021, it's because the origination experience didn't really keep up with expectations, and the typical home equity borrower is not really thinking about or looking for mortgage product or mortgage experience specifically. They need $50,000 or they need $100,000 for some life event or to pay for their kids' tuition or to put a new roof on their house. And there became much faster paths with less friction available, especially with the advent of a lot of fintech personal loan programs and that sort of thing. And so, the genesis of the home transformation that shop and even the HELOC experience rates today and where we're headed with that business at rate, it will very much be centered on providing options for borrowers, providing a fair price, but delivering it with a really seamless, frictionless customer experience. And that, to me, is the primary driver of the surge in demand for home equity. I think the fact that you don't have as much competition from cashed out refi and the fact that you've got lots and lots of borrowers locked into low interest rates on their first mortgage, and home equity is a convenient way to tap their equity. I think if the home equity experience was still 8 weeks long and 2 pounds of paperwork in order to get a loan, I don't think we'd be seeing the surge in demand we're seeing today. Customer experience is table stakes, and I think as long as lenders are providing an attractive customer experience and a fair price, there will be persistent demand for the product. And so I expect the category to remain strong, even if mortgage rates were to start to come down.
That actually lets me rethink so many career options, actually, right? So the way how HELOC has transformed, I mean, I never expected that this will happen even 5 to 6 years back, but now this is going crazy. Interesting. It's a conversation worth having for an hour, but we just have a couple of minutes left. So let's just go into a couple of rapid fire questions. Best city that you lived in?
Interesting. I'm going to say I live in Middletown, Delaware. I've lived here for a long time, and we moved here when we started to have kids because the school districts are great. I'll say what best city, best thing about it is that I can be in, New York, Philadelphia, DC, all of those cities in 90 minutes or less. And so, it's very convenient from that perspective. And weekends I can drive to the beach. And so it's got sort of all the conveniences of suburban living close to, a lot of major cities that I need to be in often.
Sure, absolutely. I mean, I agree to it 100%. One thing on your bucket list?
That's a really good one. One thing on my bucket list. Well, I'll give you a good one, actually. So I am a fan of Big Head Time and Monsters. It's this 90s band. Anyway, they play the show every single year. And this past year for Christmas, they released this album for the first time, and one of the obviously when an album is wrapped up, you know exactly what it is. But when I wrapped it, there was a ticket to the Red Rock show that was always like a bucket list item for me. So still on my bucket list, but will be checked off in June of this year. And so that's a huge surprise I got from my wife, and it was the best Christmas gift I've ever had. I think it was the first time I ever to tears my Christmas gift.
Interesting. The next rapid fire is, where will you think rate will be in 5 years in like one sentence, maybe?
In one sentence, I would say rate will be a brand that's synonymous with wellness. Wellness across three major dimensions: financial wellness, personal wellness, and mental wellness.
Interesting 3 dimensions. Nice. Last book that you read?
Yeah. I've read that book twice.
Nice. So, Adam, last question. This is not a rapid fire, but more of a generic question about your leadership. So, how do you think your leadership style has changed in the last 25 years since you started your career?
Yeah, that's a good question. I think, especially over the last several years, I think the big unlock for me in my career has been just the realization that the best approach to leadership is being myself. I think as my career progressed and I moved into more senior roles, I felt like I needed to play a part and evolve to something I wasn't. And, the more I thought and acted and spoke and behaved like myself, the more success I had. And that's just something I'm going to do go forward. And so there's only one version. Like the version of me you're talking to right now is the only version of me that exists. And that's how it's always going to be. And going back to the culture at Rate, and something that was very, very attractive to me about the company is that the people there are really, really great. Got that sense from the very first conversation with them. And it is a culture that encourages people to be themselves. And, when we begin, I'm very much seeing that. And again, thankful for the opportunity I've got here.
So, this was a very powerful, power-packed conversation within 25 minutes. So, thank you again for doing this with us, and we wish you all the best for your new role at Rate. We are excited to hear about more when you progress, and again, wish Rate all the best and as well as you, right? So, have a great time.
Great. Thanks so much for having me.
Thank you.